Set from Forex Trading Unlocked, and we are here with a Forex trading market analysis for January 5th through the 8th, 2021. Before we get into it real quick, we want to show you our disclaimer. Our disclaimer just wants to remind you that this webinar is for illustrative and educational purposes only. And with that, I want to just remind you to subscribe to our YouTube channel, Forex Trading Unlocked, and also check out patterns available on Amazon.com in paperback and Kindle versions. And just to let you know, from January 13th through the 17th, we will be running a free Kindle promotion on Amazon for the book, so you can get the book for free for a month to check out. All right, with that, let's go to our live action screen. We have the www.forex-trading-unlocked.com website pulled up. We have the workstation page pulled up already. And as you can see, we have the euro to US dollar market pulled up here also as well. There was a bearish engulfing line sell signal that ended the year of 2020. So far, we've been buffering up against these highs, trying to make a breakout and push that signal apart. So far, it has failed. Today, the market has not made as high a move high as it did yesterday. In fact, what we're going to do is pull up another forex-trading-unlocked.com website page. At the nav bar, I'm going to pull up the Forex Trading workstation, and we're going to toggle down to this page. And as this chart is loading, we're going to make it an hourly and see what's going on here. So as you can see, the hourly failed to make a new high yesterday. Had a correction back down to here. There's a little gap from Friday that still is there at the bottom of the range from Friday's close. Now, as you can see, we've been rallying since yesterday afternoon into this morning's session. We had made move lows up until a few hours ago when we made a higher move high and a lower move low. Right now, we're trailing right underneath this resistance area, trying to poke through $1.2290 and make a new higher move high on the hourly. Right now, it seems like we are riding this upward sloping trend line here that's been holding the daily chart intact. That's a pretty severe slope, and just by attrition, we're falling through it. Does that mean it's bearish? Absolutely not. We need a failure from this $1.2127 area for that to become the reality. Any trading below there would definitely have us targeting this downside target area. $1.1955 is the ideal target, but somewhere between this $1.2040 down to $1.1872 is the range. Remember, volatility has been pretty extreme. We have back here at the beginning of November, the euro US dollar was trading right around $1.16 even. Now it's trading $1.23, or excuse me, $1.2287 as we talk right now. That's a lot higher. That's a big move that's occurred in just the past 2 months. So we'll see what happens, but right now, dollar weakness is definitely coming into play because of the strength in the US dollar. Speaking of strength in the European currency, let's check out what's going on with the British pound. The British pound here, as you can see, had made a higher move high yesterday and settled lower. Is that negative? This thing's been grinding higher for quite some time. I would be very careful trying to fade this bull right now. Brexit is over. We're in the post-Brexit, but the lockdowns are getting pretty severe in the UK as things get more extreme with the coronavirus lockdowns in the UK and the EU. You have to think that it's going to start to be a dredge on their economies. No matter what's going on with Brexit, that's irrelevant. It has to probably weigh on the pound eventually. Does that mean it's starting right now? No. Right now it's positive. So right now the dollar is under pressure. It's under pressure versus most of the currencies today. But the dollar had a big rally yesterday. I think that's because of the U.S. stock market sell-off, the reaction to the beginning of the new year. So, and now we're having a little bit more of a stabilizing of things. Remember, the stock market now has been open for 2 hours. The European markets and Asian markets are closed. So now we're going to see what happens with the U.S. equity markets and see if they balance out from yesterday's market reaction. Perhaps we get a very strong buying pressure that comes in because it's the new year. Maybe not. Maybe expectations right now are still going to be very negative. We'll see. We still have the U.S. elections that are going to be confirmed tomorrow. That has yet to be done, and we know that there's probably going to be a little chaos in Washington that could disturb the dollar for a while. And I think that's what you're seeing is that until we have the inauguration now of Biden for the U.S. presidency, I think you're going to see still a little volatility in the dollar. Now, I wouldn't say that him coming into office is going to all of a sudden turn it into a bull, because that's definitely not the case. But we may see at least a little bit of a balancing once we have confirmation of leadership in the United States. With the UK, though, however, the lockdowns are expected to weigh on the pound. But we're waiting for a breakout. This market keeps on banging new highs, so a challenge of $1.3703 has it targeting $1.38 even. Below here, we're looking for a correction, but I would not try and sell into this rally. Just like you don't want to catch a falling knife, you don't want to try and get in front of this freight train. All the bears pretty much have been rewarded with losses and not gains over the past few months, so be very cautious. Is this a sell signal here from yesterday? Not really, just because it made a higher move high with a lower close. That's a classical bar charting short-term reversal signal, but as you can see, the market's higher on the day today. Maybe let's take a look at the hourly real quick for the British pound US dollar. Do we have any questions out there? So far, we have no questions out there in the audience. Okay, that's good. It's quiet out there in Forex land. The hourly here is making higher move highs and higher move lows, grinding from the bottom it made yesterday. Obviously, this didn't have a gap like the euro did on the hourly. It's not trying to fill anything there. But as you can see, even though we've been trading higher since yesterday afternoon, we could be pushing the extreme on this. So there was quite a slide to start off the new year. That doesn't mean that this was could have been just a little balancing going on before we make a run at new highs. Anything can happen. But let's see what happens. That's what we need to do now, is look for a swing trade to develop over the next day or so to give us the true direction. Blasting up to new highs for sure would put us on a very, very big bullish stance, and expect a lot more buying to come in. But potentially right now we have a chance to have a correction right now and at least get a little cleaning out, get back down to say $1.3460 area down here, and then come back and make a run for new highs. So we're not very bearish here. We have no reason to sell it, but just in case, let's kind of come up with a little area for you here. I would say that right here, this one, if we're going to have a break, $1.3416, this would be your target area right here. We'll see what happens. I'm not bearish. This is not a sell signal here. This, if anything, would become just an area to look for a bounce. And if you look at this here, we'll take this and move this in here, and that starts to come right into this area and hold up at $1.3416. So this is a good little spot that you could expect to see maybe a bounce. So we're not bearish. Remember, that is definitely not the case here. US dollar Swiss. Let's see what's going on here. Okay, no questions. Okay, we definitely have viewers today. We just don't have any questions yet. Okay, that's fine. That is totally fine. Yeah. This one real quick. Sorry about that. Just wanted to check out. Okay, so US dollar Swiss. What do we have going on here? Well, I'll tell you what we got going on here. This is a bear. It is a very bearish market here. So what do we do with that? Well, 89.18 here. This is our pivot where you have this downward sloping resistance coming in here. This is keeping the trend intact. I think if we can get above 89.18, which would be this series of highs here, you can see how the market was buffering, and then poof, it fell apart. So this is definitely a key resistance area. Now, if we were to get a rally above here and it gets a nice little new move up into this area here, we are by no means getting bullish this market. This market is a major bear, but a correction at some point, I mean, you can see it has had them, and it has not really had one for 2 months. So I think, like I said, with the election issues with the United States until the 20th, which is 15 days away, once the inauguration happens, I think you might start to see at least short-term correction in the dollar, and that would be a rally to sell. So just to remind you on that one, because the trend overall for the U.S. dollar is going to be down most likely for the next 3 to 4 years. All right, now let's go and look at the U.S. dollar Japanese yen and see what's going on. So our first flight to quality currency that we looked at was the Swiss. That's in the hole. Now we have the Japanese yen, US dollar yen. This is in the hole also. So right now your flight to quality is going into Swiss, it's going into the yen, and it's now, I wouldn't say flight to quality when it comes to the euro US dollar or the pound dollar. Those are not flight to quality currencies, but the fact that the yen and the Swiss are also pounding new lows, that's very significant. It means that all the rest, as those are strong versus the dollar, all the other, well, especially because the pound and the Swiss aren't trending in that kind of a direction, so let alone the yen versus other currencies. This is a dollar move. So what are we looking for? Only if we get a rally above $1.390, $1.4 even here, will we even start to think about having a, I would say, sideways trade develop, not a true trend. I think you could probably see some consolidation back around that level. As you can see, we had that going on for the month of November for the most part in here. This area has now kind of become resistant, so I think if we get pierced back into it, that would be about all you can expect from it. Today, obviously, it's getting hammered, and I would not try and fade this move. It made a lower move low today. I mean, it could turn around and bounce. Anything is possible, but I would seriously be very cautious when it comes to trying to catch a falling knife here. Like I said with the other markets, don't try and fade these trends. Wait for a signal. Do not try and push this. So, US dollar, Japanese yen, we are still bearish. We're looking to sell rallies right now. Lower move lows, lower move highs, keep on happening. That's the trend. All right, Australian dollar, US dollar, same trading area of the world here. Look at this, pounding new highs. So as you can see, the dollar, after having had a nice start to the year yesterday, has since turned around because the dollar bears just will have nothing of it, it seems. So now we're in a very precarious situation where we definitely need to wait for signals. And when it comes to the dollar, you're looking at a sell rally forecast against most currencies in the short run right now. That is the mode. As you can see, our directional pivot here at 77.45 is right around where the market is trading. Or excuse me, 77.52. And then we have this little double arrow here. This is our pivot. Above here, we're looking to keep on pressing highs. Below here, not that we're bearish, but this is a very steep trend here. It's most likely we're going to come down and touch this support line somewhere. It could just happen by attrition, by going sideways over the next couple days. But like I said, I think you have to be careful about trying to fade the US dollar right now. So Australian dollar, US dollar, this trend continues to pound the dollar. Interestingly enough, the New Zealand dollar, US dollar is mimicking the same thing. They are pretty much in tandem right now. I don't think that the Australian dollar is as strong as the New Zealand dollar's trend is. This one, just like all of them, a nice correction would be something that is normal and we're expecting to have happen right now. But right now, the trend is just so fierce against the dollar. It's tough to sell this one too. So I would say be very cautious trying to sell into this. If you are fighting a very tough battle that has obviously killed people in the as far as being short for the past 2 months for sure, without having very many opportunities to capitalize on. So I'm not saying to only buy this market and try and sell it and then sell it, but I just would say be very, very cautious selling into it. Look for your moves. Make sure you have a signal. Be disciplined. Otherwise, this isn't a buy break forecast for New Zealand dollar, US dollar. US dollar, Canada. Oops, not Casada, Canada, that is. This market here made a little low yesterday, and as you can see, is back at the bottom of its range here for the body of trading yesterday. So this is significant. The bulk of the trading yesterday is where we have had for today, and now we're leaning on the lower part of it. Could we fall through and hit support again? Absolutely. Are we finding a bottom? Who knows? We don't have a signal right now. What we do know is that after having made a lower move high, we made a lower move low to start the year off, and now we are consolidating and trying to figure out what we're going to do. I would say, once again, wait for a signal. There is no defined market action here to take against this trend, and I certainly wouldn't try and fade it. It's been very strong against the dollar. Until the election, the U.S. election, excuse me, the U.S. inauguration happens on the 20th, I think we're still going to see this trend into sideways develop over the next week and a half as the change of leadership happens in the United States. And then after that, like I said, not going to become a dollar bull. But it wouldn't surprise me to see, as these lockdowns continue and the new things going on with the new presidency and we already know what's going to happen as far as presidential mandates. They're going to come down in 15 days. So, and when that happens, it's most likely guaranteed to. I'm not going to put a positive or negative spin on anything because I can't forecast what will or will not occur for sure, but I am positive that we will see a big volatile shakeup in the market. Not necessarily being bearish or bullish, but we will have some very big swings, especially because it's going to hit the currency markets, because the interest rate markets don't have any room to go anywhere right now. So, and we're in the midst of some major bond auctioning going off over the next 3 to 6 months as the national debt, actually 12 months, because this year the U.S. Treasury has close to $6 trillion in debt coming due that has to be refinanced. So that's besides what has to be just sold off because they need revenue. The U.S. government has $6 trillion that it has to pay this year off on its debt. And we know that's going to come through the issuing of new debt just to roll it over. They're just going to refinance it, which is at these lower rates, which for the taxpayer, I guess, is technically a fundamentally good economic thing. So, but we'll see what happens. U.S. dollar. Now, for all these people that are ready to go on vacation and think that with the vaccine is going to change everything, look at the peso. It's stabilized since we've had all this vaccine talk. It's set a range pretty much bobbling around 20 pesos to the dollar. That's not the worst. I mean, considering you could have had a really good deal on pesos a few months ago, getting up to upwards of 25 pesos to the dollar. Now, still a better deal than what it was a year ago when this market actually originally was looking like a totally different thing. I mean, look at this. Let's go back to, this is February of a year ago. This market was just below where it was, but it looked like it really wanted to tank. And it got all the way up to 26 pesos to the dollar. And here we are trading at right around 20, just at 1992. So, 20 pesos to dollar, pretty stable, not much to look for here. I think you're seeing a basing. We'll see what happens with once again, the new leadership. I think then when you see that happen, that you're going to probably see the peso drop back down to around 17 pesos to the dollar, I would say, by springtime. And definitely, as we push at least into March, you'll probably see this peso around 19 to 18.5 pesos to the dollar. Unless dollar strength really starts to come back into the market. So let's go look at the Euro US dollar where we started this webinar. Once again, not a lot going on here. We have the bearish engulfing line sell signal from a couple days ago. We're sitting below the highs. On the hourly, we're coming on 11 o'clock. So we're going to confirm higher move highs already. That's been done on the hourly. The key is we'll continue to pressure resistance. I think the trading is probably done for most of the day. I don't think you're going to see much. It's more likely than not going to settle into a little range trade down to a dollar. This is the pound. Excuse me, wrong one. Euro, US dollar, they both look pretty much the same right now. Here we go. $1.2292 here, excuse me. Somewhere around here, you probably see it bobbling. I don't think you're going to see much below $1.2280 the rest of today. If you do, then that would have us looking to set new or move lows. You have to take out this area right here. This is the key. We got to take out the low from 2 hours ago. Under $1.2254, we get some selling action going back on, and then we can see, hopefully, that this will turn around and maybe make a run for this $21.27 over the next couple days. With that being said, I want to say thank you very much for watching us today. Don't forget to subscribe to our YouTube channel, Forex Trading Unlocked, and check out the book, High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle versions. And if you can wait until the 13th of January, next Wednesday, for 5 days, we'll be having a free Kindle book promotion, and you can get this book and read it for free off of